Hello and welcome to Business Incorporated Live on Channels Television, where we track the markets, the economy, and of course, your money. Here are the stories making the headlines. Kenya cuts lending rates to ease credits ahead of Christmas. And Africa's largest off-grid solar and storage project launches in Angola. Egypt and EIB explore water and technical education investments. Great to have you join us for this half hour. I'm Will Ibang. Let's get a check-in on the commodities market. We start with oil space, where prices fell on Tuesday. Wednesday, extending losses from the 2% drop in the previous session. We saw markets keeping a close eye on the peace talks to end Russia's war in Ukraine and the looming decision on the U.S. interest rates, which is expected today. That will see Brent crude down 0.02% to settle at $61.93 a barrel. We see WTI up on the reverse side of the trade, up 0.07% to close at $58.29 a barrel. And now analysts believe oil is keeping to a tight trading range until we get a better idea of which way the peace talks will go. Now let's look at the metal space now and see how those perform today. We see spot gold down today, $4,223.80 per ounce. We see U.S. gold also down. Spot silver, however, that's the outlier. So today, up 1% at $61.45 per ounce. Platinum also down, palladium down in today's trading session. We'll move on to other stories making headlines in Africa. We see the Central Bank of Kenya has reduced its benchmark lending rate from 9.25% to 9%, offering Kenyans cheaper loans ahead of the festive season. Now, the MPC chairman Kamau said in a statement today, that was on Tuesday, that the cut is meant to boost economic activity by improving access to affordable credit. He added that the move supports earlier efforts to encourage private sector lending while keeping inflation expectations anchored and maintaining currency stability. Now we see other news. We see big one coming from Angola. Africa's biggest off-grid solar plus storage project is now online in the country, delivering 25.4 megawatts of solar power and 75.26 megawatts per hour of battery storage to the Kazombo region. Now the new system, built by Portugal's MCA Group, supplies daytime power from solar and switches to batteries at night, eliminating any use of fossil fuels. It's expected to benefit more than 136,000 residents in eastern Angola. Now, MCA says the plant marks the first major power source for the area and is part of Angola's rural electrification project, and that's backed by financing from Standard Chartered and European and Asian export credit agencies. Now, we'll move on now. We see Egypt and the EIB, that's the European Investment Bank, the delegation there discussing new investments in drinking water, sanitation, and technical education projects. Now, current cooperation totals over 700 million euros. That's plans for desalination plants and improved water networks. Major wastewater projects across several governorates were also reviewed, with the EIB offering continued support for their sanitation and pollution reduction initiatives. And the delegation met the Education Minister Mohamed Abdel Latif to discuss expanding applied technology schools in the country, and that's addressing growing demand for skilled workers in Egypt and in the region. Now we're going to be taking a look now at the markets. Currency markets first up. You see Africa's currencies delivered a mixed picture in November, with only a few managing to strengthen against the US dollar despite tighter global financial conditions. And we're going to be looking at this because festive season is here, December is here, Christmas is here, and what currency is going to stay stable and very strong against the dollar. Only a few African countries strengthened in November, but we're going to see how December closes up. We see Nigeria, they're down in November 1.36%, and that's after closing up 3.4% in October. We also see Congolese franc also slight appreciation, strengthening there, and this is driven by higher cobalt and copper export inflows in that country. But let's look at other markets. We see global backdrop. You see persistent global monetary tightening affecting most of these African countries, and inflation is also a key factor that has been the backdrop here. Now, core drivers, we see firm commodity prices, especially now in battery minerals. Very, very important point. Now, improved central bank oversight in select countries. You see central banks in many countries taking cautious steps now, easing and tightening, or also cutting rates or keeping rates steady to be able to manage the growth that we're seeing in Africa. Now, stronger export earnings and external inflows. We see more inflows coming into Africa. Nigeria has also recorded quite a few there. Let's look at the top 10 countries, shall we? The countries that made the top list for November. We see, let's have that very quickly on the screen there. If we could look at that, we see Seychelles, that's the Seychelles currency, that's the rupee, up 8.67% in Africa. That's one of the top countries there. The Liberian dollar, we see that also strengthening for the month of November. West African CFA franc also on that list. But the Congolese, we talked about that, the Congolese franc made the list, but was on the 10th position there, 0.66%. We're having so many of these countries performing well, but we're hoping that we get a stronger, more dynamic currency that's able to withstand the dollar and possibly other Western currencies. Now, let's just get a check-in on the equities markets and see in Africa, top equities markets in Africa, the major, the big fours we always look at. We look at Nigeria, Egypt, South Africa, and Kenya. We see Egypt, the Nigerian NGX, up today at intraday, 0.12%. That's rebounding from yesterday's loss. It's now 147,122.81. But we're going to be talking to Kayode Esseyin. He is investment associate, Cardinal Stone Securities. He's going to be telling us what's driving the move there. Good afternoon, Kayode. It's good to have you on the show.
Good afternoon. Thank you very much for having me.
Kayode, the ASI, the all-share index is up 0.12% at intraday. What are the stocks driving this positive momentum as we speak?
I think currently what we are seeing in the market is investors who have been, in a manner of speaking, scared away as a result of the announcement or the implementation of the expected implementation, rather, of the earlier announced capital gains tax, as well as those who were a bit concerned about security worries that were mentioned by Mr. Trump, starting to return to the market. On the one hand, what we have seen in terms of securities is looking like a consensus has been reached. For one, we recall that the NSA recently announced that he was on a trip to the United States where he met with Mr. Hegseth, and they had productive discussions, and that seems to have led to at least some agreements on supports regarding fighting terrorism in Nigeria. And then also the fact that Mr. Taiwo Oyedele also announced that there will be some grandfathering clause as regards investment in the equities market. I think those two things just essentially waylaid and investors' fears, leading to a return of appetite for local Nigerian equities. And that was what we have seen starting from say November and even some part of December.
Let's look at what's happening there. Banking sector was the best performing at intraday. Yesterday it didn't perform so well. It has gained about 56 basis points at intraday, rebounding from yesterday's loss. That was because we saw buy interest in GTCO, Zenith Bank, but not a lot for Access Holdings. What's going on in that for Access Holdings?
Okay, so for the banking tickers overall, I think one of the things that's driving appetite in that space, and I'll speak overall for the sector before I dovetail in a bit into Access, is the fact that following the recently concluded capital raise that the CBN basically ordered these banks to undergo, what we are seeing is the expectation, and especially when you also factor the recent recovery in the economy, what we are seeing is that the expectation now is going into 2026. And even beyond that is that we might see some very serious asset creation in terms of loan books of these banks going into next year. And so markets are looking at, market participants rather, are looking at banks with potential to drive this asset creation, who are likely also to benefit from the improved economic and even the base effect in terms of some of the impairments or that the forbearance that they were forced to take sometime in the year. So it's looking like going into next year, banks are likely to do well, particularly those who have been able to come out and essentially get themselves out of these regulatory forbearance issues and have a very more robust balance sheet. So we expect games like GTCO and Zenith in particular to do significantly well next year, and that's what market participants are pricing in currently. So for access, right, what we have seen is, I mean, especially following recent announcement, right, that they are still in the process of trying to or they recently concluded a private placement, trying to raise capital, additional capital, even following the earlier capital raise, right? So it looks like there's still some uncertainty there as to what exactly is going on in that space. But the moment those uncertainties are cleared, we expect market participants would also start to smile, especially if you look at the fact that Access Bank looks to be the bank with the largest balance sheet in Nigeria, right? So people are just waiting for these uncertainties to clear out before they take positions in these names.
Okay, so while do you see the market closing today for today? Yesterday at intraday it was in positive territory, but surprise, surprise, we saw it closing negative. So what are we looking at the close of business?
So I think the trend will likely continue, especially because we have, maybe I should have started with the fact that I don't have a crystal ball. But I mean, going by what we've seen so far, well, we can say it's quarter to close already, unless there is, let's say, an extreme tail event at the close of market. We think market is likely to sit firmly and close positive in the day. I mean, I think the interest we saw in these banking names, like you mentioned, and even several other bellwethers like MTN and Co are likely also to continue, not just today, into the remaining parts of the year, as market participants position again ahead of dividend resumption in several of the FMCG names, as well as just basically improving macro's impact on purchasing power and consumer wallets overall. So I think, yeah, for today, I think market will likely close positive. To answer your question.
Before I let you go, Kayode, what stocks do you think investors should trade or fade?
Trade or what?
Or fade. Should they trade or should
fade,
they sell?
Oh, okay.
Yes.
Okay. So, topic, I've been preaching the gospel of MTN since the start of the year. And even though the stock is close to 100% up on a year-to-date basis, I still think that MTN is set to have another fantastic, I mean, Q4 2025 and even 2026. I think the issues, particularly the FX losses, which drag the company's balance sheet, has become a thing of the past, and the company has also positioned itself to perform significantly better. So MTN is one of my top picks, and then I also like the banks, GTCO and Zenith. If they're able to deliver on this asset creation I mentioned, if they're able to grow their loan book into the current year, benefit from the base effect I also mentioned, I think those stocks are likely to do well. Aradel is also one of my favorite. I think in terms of the aggressive expansion plans that the company has undergone and the fact that they still look to be wanting to do more, I think there is potential significant upside in their names. And then in the FMCG space, we have the Nestle's, the Nigerian breweries, and the Guinness. The brewers in particular are also likely to do well as purchasing power improves, which has a second-order impact on improvement in purchasing power, is second-order impact on brewer, on alcohol and recreational activities demand. So those names for now, I think those are my top pick going into 2026.
Fantastic. We'll take that as the icing on the cake. Kayode Eseyi, Investment Associate with Cardinal Stone Securities. Thank you for joining us on Business Incorporated.
Thank you.
So look at other markets now in South Africa. We see the JSE, FTSE JSE up 110,857 points, up 0.11%. EGX 30 in in Egypt is for 2,054 points up, and we see Kenya trading Tuesday's session lower by more than 1%. That's 1.3% on the screen there. Let's look at other markets now in the Middle East. We see them trading mostly in positive territory. Dubai is up 0.37%, and we see Abu Dhabi down 0.09%, trading in the opposite direction there. Let's look at other markets within the region. The Saudi index is also up 0.11%. 10,712 points, and we see the Qatar index also up 0.2% at intraday, 10,799 points. Let's look at other markets now in the U.S. Stock futures are little changed today ahead of the Federal Reserve's interest rate decision, which a lot of investors are keeping a track and keeping an eye on. Now, futures tied to the Dow Jones, we see that rising 0.2%, and we see the S&P 500 up 0.09%, and the Nasdaq futures, we see that rose 0.04%. Now, stocks have been teetering between slight gains and losses in recent sessions as investors await this week's key Fed meeting in the U.S., which is the final one of the year, where the Fed is to deliver its third straight interest rate cut of 25 basis points. So let's look at now Asian markets and see how they closed today's trading session. It was mixed today as investors, assessed China's inflation data and awaited the Federal Reserve's rate decision. We see the Nikkei in Japan down 0.1%, and we see Kospi in South Korea also down, declining by 0.21% to finish at 4,135 points. Hong Kong, that's in China, we see the Hang Seng Index closing up, however, in opposite direction, 0.42%. Let's look at mainland China, the Shanghai Index. Let's see the composite there. How did it close? Down 0.23%. And we see the Nifty 50 in India also lower. Now, China, we can say that this result is after China's inflation, which rose 0.7% from a year earlier. That's its highest level since February last year. Also, that's probably affecting investors that are in that region. See that red close there. Hopefully, by tomorrow, we'll see a positive outturn when we get the Fed's rates results today from the U.S. Fed. And we're going to be looking at other markets like the Europe markets, and we see how they performed. And I'm joined now by Lars Holter in Berlin. Lars, good afternoon. What's happening and what's moving markets in Europe right now?
With you. Well, we've had the DAX in Frankfurt up for a few days now, so knowing what we've been dealing with for over half a year, however, we know, of course, what that means. We're in for some profit taking. After all, markets have been going sideways for a while now, and whenever the DAX gets a bit higher, sellers come out immediately. That's happening right now. We're seeing the DAX down, not by much, by 0.4%. Other European markets down as well. What's driving markets is actually not much in terms of news from home here, not much moving markets. Looking through German or even European numbers, everyone here is focused, of course, on that Fed meeting in Washington, Will, that you also just referred to. And while, as you said, lower interest rates are kind of expected, we're waiting to hear Fed Chief Jerome Powell's interpretation of what's going on and what he's expecting for next year. However, all of that, of course, will happen after markets close here in Europe.
We'll wait to see what the U.S. Fed decision they come to. But moving on to Brussels now, the EU, they've agreed on a supply chain law that has been discussed for years now. What can you tell us about the final version that Brussels is putting forward?
Yes, well, unfortunately that it is much weaker than initially planned, and it's not that supply chains are no longer supposed to be clean, but the law now only applies to companies of more than 5,000 employees and with an annual revenue higher than 1.5 billion euros. So what we're actually seeing out of Brussels is not a weakening of the law per se, but the fact that it only applies to the largest companies, of course now leaving out tens of thousands of smaller and mid-sized companies that are indeed working in sectors where this kind of oversight would have made sense. And as a reminder, the law, of course, is about companies implementing due diligence throughout their supply chains. It means essentially that the responsibility of companies no longer ends at their factory gate, but that it extends throughout their entire supply chain, that they have to make sure there is no child labor or forced labor, no discrimination, that there is protections against land grabbing, that workers have the right to form unions and be paid fair wages. All these are important points for industries from textile to mining to manufacturing. And like I said, Brussels still wants all these points to be in place for all companies, but they're not imposing the new very strict law on all of them.
But if the goals are worthwhile, like you say, why are small and mid-sized companies being exempted?
Well, it's merely because they realized that it will be extremely costly for companies not only to adhere to all these rules, not only to exercise such control of their entire supply chains. Mind you, for some companies, these supply chains can be long and complicated and stretching around the entire globe, but it's also costly to document all this in a way the EU had originally wanted. Companies were complaining of millions in added cost, and that at a time when the EU is struggling to keep up with the US, China, India, and other markets, including some markets that are very much in the process of deregulating such issues. So in terms of being globally competitive, Brussels realized that they can't impose strict and cumbersome new rules on large parts of the EU economy. Obviously, like I said, it is likely in the interest of companies too to have clean supply chains, but they won't be forced to spend quite as much time and money on enforcing and documenting everything, which is still unfortunate considering how important human rights and also environmental protections are, but it's definitely owing to the reality of a weak economy here.
Definitely. Yesterday, we did get the news of more companies being possibly shutting down as a result of, high energy, possibly no succession in these companies. I will hope that Germany, that's in Germany, I hope that they turn around and possibly EU gets formalized framework to be able to lead and push the economies in that block forward. Thank you so much, Lars Alter, for joining us and giving us your perspective. Lars Alter is a Deutsche Welle correspondent joining us from Berlin.
Thank you, Will. Good being with you.
So now let's look at other markets now. Crypto is everyone trades crypto. You love crypto, I do. So Ladi loves it more. But we see a new mobile. Well, before we look at the stories making it, we see Bitcoin. Bitcoin is up today. We see it's 1.45% up, $91,000. Anyone in that space right now is probably cashing out. Now we see XRP is, well, however, in the red, and Ethereum is also up over 5%, they're nearly 6% up. Solana is also up, and other stocks, we see BNB down, and other stocks, ADA also down there. But let's look at stories making the headlines today in that space. We see a new mobile game inspired by Donald Trump is shaking up the crypto landscape with a surprising twist. The Trump meme project has unveiled what it claims to be the first and only official Trump mobile game built for fans of the U.S. president and powered by the Trump token as its in-game currency. Now, the announcement has triggered a notable spike in the Trump token, which jumped 5% over the past 24 hours. So look at what other stories is making the headlines there. We see OCC declares U.S. banks to run riskless principal crypto trades, and that's because the U.S. banks now conduct riskless principal crypto trades, marking that culmination of a 2025 regulatory shift that rolled back earlier the Fed, FDIC, and OCC restrictions on custody and tokenized financial rails. Now, under this framework, banks may facilitate trades by buying cryptocurrency from one client and immediately selling it to another without ever holding the assets on their own balance sheets. That's cool. Now, the move is the latest in a string of 2025 policy adjustments aimed at easing bank involvement in digital asset markets and expanding regulated access to crypto-based financial services. And finally, on that headline list, we see Canton. That's a framework has announced a strategic partnership with Redstone Oracles to provide the critical data infrastructure for its growing real-world assets. That ecosystem is really growing, valued at $6 trillion. Now, the collaboration aims to enable institutional-grade tokenization of assets such as real estate, bonds, commodities, and private equity, bringing unprecedented scale and reliability to blockchain-based finance. And that's so much happening in the crypto space and so much happening in the economies of the world. But we'll wait and watch out to see what the Fed decision will be. That will determine the economies, the fate of most economies, I would say. And that's a wrap on the show. I'm Will Ibong, and I'll see you tomorrow, same time.